For many people, when they think of technical analysis, they're really thinking about like patterns, patterns on a chart. Maybe you're drawing trend lines or hand drawing patterns or recognizing patterns on a chart. Now, we don't hand draw them anymore. The trading platform will actually help you to draw lines electronically on the screen. They're very helpful that way. You can use different colors, all sorts of great stuff. But that's the idea, is like, oh, they're chart, and sometimes it's called charting, for that reason, because you're looking at these patterns, and there's nothing wrong with that. Chart pattern trading and trading off chart patterns has been very successful for a very long time, and can have some of the strongest indicators out there as far as making decisions around whether to buy or sell a security. So, and they also have really fun, cool names sometimes. Like, they got fun names like the dead cat bounce, right? Who wouldn't want to trade based on something that's called a dead cat bounce? Or maybe you wouldn't like to trade on that because you like cats. I don't know. I like cats. I used to have cats. So some people will trade only on chart patterns. They learn their favorite patterns, they really become specialists in those areas, and then they can visually recognize them fast. In fact, if you really are a visual learner or visually like to look at analysis and things like that, chart patterns might be really great for you. If not, they're another tool in your toolbox, of course, as far as different indicators and combination of indicators that you can put together. But they can really, for those who can, if you can see these patterns developing, that gives you an edge over maybe other traders who can't see them developing as quickly. And my goal here in this series of lessons to help you be able to see those patterns, easily as far as seeing the patterns. And the idea is you're going to visually see these broad patterns, and they may look like objects, actually, and a lot of their names come from that. You'll see in the upcoming lessons. They might look like a triangle or a rectangle or other shapes, or things like a cup with a handle on it. And when these things form, that means something might be happening. And the idea is a pattern that's indicated something in the past and has been proven over time will do so again in the future. Now, nothing's perfect, of course, but that's the idea behind it, that similar situations will recreate these repeatable patterns, and we can trade off those. In fact, your fellow traders out there are seeing these patterns, some faster than others, but when they see these patterns, they're reacting in predictable manners. And for us, when we're trading and we have these indicators, whenever we can see the larger group of traders out there in the world behaving in predictable manners, that allows us to really be confident in our trading itself and in our actions and our strategies that we're putting together. And then these chart patterns, most will employ straight lines in many cases, or try to, or certainly when drawing a trend line, and some, of course, are much more dynamic in their shape. And pattern lines will follow typically either the highs or the lows, right? So you're seeing these patterns develop around the highs and lows. And pattern types are organized whether they forecast or predict or indicate a continuation or a reversal of the current price move. So the idea is you're seeing a trend, either upwards or downwards, and you want to look at that pattern that's developing and see, when you recognize that pattern and maybe invest or trade around that pattern, is it going to continue? Let's say it was an uptrend. Is it going to continue in that uptrend? And so we might, if we've already bought, we might want to keep holding that until it gets to a reversal point, or maybe we want to buy now and ride that uptrend. And some will indicate a reversal, which is the exact opposite. Maybe it's been, in this example, an uptrend, and now it's starting to run out of steam, and it's going to change and go either sideways or maybe start going down. And so maybe if we own the security, we want to sell more closer to the top. So continuation or reversal patterns are very important to recognize which is which, and we'll be going into that, of course, throughout the upcoming lessons. Now, it might take a little practice to start seeing the patterns, okay? It's okay, that's normal, because when you're dealing with real life, things don't match up perfectly. What I might demonstrate or you might see out there might look like a triangle, but when you go out in the real world, it might not be as perfect a triangle, for example, but you're still seeing that movement as far as how the prices are reacting, let's say inside the triangle, in the triangle section. So it's okay if they don't match up, in a perfect thing, and it's not a perfect world that we live in. The other thing that can frustrate a lot of people around with patterns too is that they take time to develop. It's not like something that, okay, all of a sudden you look at the next day's price bar and all of a sudden, boom, there it is. There's the development, might be that next day's price bar is the one that now confirms your idea of what you want to do. It did something, and now you're going to take action. But to get to that point, a pattern had to develop over a period of time. And the period, of course, can be the period of time frame you choose, whether it's short time periods like minutes, hours, or days, or longer periods like weeks or months, even years. So that's the idea behind that the time frame can fit these patterns any way any way you want them, not any way you want them to, but any way you can use the pattern the same way no matter what your time frame is. But a lot of times you can see a pattern developing and you might get excited about it. Like, I can see it coming. I just need a little bit more and I can confirm it and I'll buy in and it'll be great. And then something changes. Something changes in the news. There's a big event that happens and your pattern never fully forms. And that can be a little frustrating too. However, when you get it right and a pattern fully develops, it can be a very, very powerful indicator tool that you can use. Very, very powerful. So it's something you do really want to become familiar with. Plus, chart patterns can help with your confirmations. They can help confirm other indicators you're using. You'll learn about in things like around, let's say, how to trade off moving averages, for example. And you can use it to help, your chart pattern can help confirm that maybe a trend exists or that what you're seeing with your moving average indicator or tool is being confirmed by another chart pattern or vice versa. Or you can use it to confirm around things like trading volume changes, right? So you see a pattern, you can confirm that chart pattern itself because the trading volume either goes up or maybe it starts going down. A lot of times when there's a higher volume, it'll typically indicate that the pattern is now reaching its completion phase, and so is ready to be trade worthy, as they say. So there's an art and skill to that a little bit as far as doing chart patterns and all that. But I think for many people, that's one thing that they love about technical analysis is they love that kind of idea of looking at patterns and making decisions off of them.